Rocket Lab has quickly become one of the most talked about space companies in the market, and that's largely because it is no longer just a small rocket launch provider. The company first built its reputation by launching small satellites into orbit with its Electron rocket. This consistent launch cadence made Rocket Lab one of the few private space companies capable of generating real and recurring revenue from actual missions. But over the past few years, the company has been quietly evolving into something much bigger. Today, Rocket Lab is positioning itself as a fully integrated space infrastructure business. Beyond launches, it designs and manufactures satellites, develops spacecraft components, builds solar power systems, produces payload technologies, and increasingly supports defense and national security programs. In simple terms, Rocket Lab is trying to become a one-stop solution for customers that need access to space. This strategic shift is a major reason the company is attracting so much investor attention. Rocket Lab sits at the intersection of several powerful long-term trends: rapid growth in satellite deployments, rising global defense spending in space, increased demand for missile tracking and national security constellations, and the long-term potential of reusable launch systems. From a business perspective, Rocket Lab generates revenue through two primary segments. The first is launch services. This is the most visible part of the company's operations. Rocket Lab gets paid to deliver customer payloads into orbit using its Electron rocket, as well as its HASTE vehicle, a specialized version designed for hypersonic testing missions. Each successful launch represents direct revenue from commercial satellite operators, government agencies, or defense organizations. The second and increasingly important segment is space systems. This includes building complete satellite platforms and supplying critical spacecraft components such as solar arrays, star trackers, reaction wheels, avionics, and mission software. This business tends to involve larger contracts with longer timelines, which can provide more predictable revenue streams compared to the cyclical nature of launch activity. Recent financial results suggest this broader strategy is beginning to gain traction. Rocket Lab reported $602 million in revenue for 2025, representing 38% growth year over year. The company also ended the year with a record backlog of approximately $1.85 billion, reflecting strong demand for both launch services and satellite manufacturing capabilities. A major contributor to this backlog growth was Rocket Lab's largest contract to date, an agreement worth roughly $816 million to build advanced missile tracking spacecraft for the U.S. Space Development Agency. This win highlights how increasingly important government and defense customers are becoming to the company's long-term growth outlook. However, while Rocket Lab's current business momentum is clear, much of the investment narrative still revolves around its next major development, the Neutron rocket. Neutron is designed as a reusable, medium-lift launch vehicle capable of deploying larger payloads, constellation missions, and national security spacecraft. Up to now, Electron has allowed Rocket Lab to establish credibility and build operational experience. Neutron, on the other hand, has the potential to significantly expand the company's total addressable market and improve long-term economics through higher launch capacity and reusability. In its latest update, management confirmed that the first Neutron launch is now targeted for the fourth quarter of 2026. The timeline was adjusted after a structural issue occurred during pressure testing of the rocket's first stage tank. According to the company, the problem was linked to a manufacturing defect from an earlier manual production process, and future tanks will be built using automated composite manufacturing systems designed to improve consistency and reliability. While delays are not uncommon in rocket development, the Neutron program remains both Rocket Lab's biggest opportunity and its biggest execution risk. The company continues to invest heavily in engine testing, launch infrastructure, manufacturing expansion, and vehicle integration. These investments are a key reason why Rocket Lab still reports negative free cash flow and ongoing operating losses. This creates a classic growth trade-off for investors. On one hand, Rocket Lab is demonstrating strong revenue growth, expanding its backlog, and winning increasingly strategic contracts in the space and defense sectors. On the other hand, The company has yet to establish consistent profitability. Margins can fluctuate depending on business mix, and long-term success will depend heavily on flawless execution of the Neutron program. For now, this is why I personally remain cautious. Rocket Lab clearly has long-term potential and could evolve into a major space infrastructure player over the next decade. But I would prefer to see clearer evidence of sustainable cash generation, improving operating leverage, and successful Neutron launches before becoming more confident in the investment thesis. In other words, this is a company worth watching closely, one with real momentum and meaningful upside, but also one that still has important milestones to prove before its full story plays out.